In this video, I'm going to explain everything about my trading strategy using support and resistance. I'm going to get in more details about the trading setups I take every single day trading gold, which will give you a really high win rate. Let's get into it. So, the only setup you need to trade support and resistance is just 3 setups. This is a foundation video, as you can see here, and this is the way I trade. So first of all, I'm going to start with the trading plan. Every profitable trader, he should have a trading plan and a clear rules and system in order to be profitable. So what does this trading plan include? Simple thing. First of all, trading session. You have to choose a trading session you're comfortable with trading, and also a time that you are free. It's about 2 to 3 hours. Here I'm going to show you in details how can you choose your trading session. So for me personally, I like to trade the relapse from the sessions. For example, NY, I trade during this time. As you can see here, this 3 green circles is the volume time, which is a lot of people, they get confused about when is the volume time. I get this question a lot, like endlessly. So this is my time zone, and you can visit this website and check this clock, and you can find which time you are comfortable with trading. So I like to try to trade relapse, like this is Asian and London. I trade pre-London, which is about 2 hours from 11 till 1:30 approximately, and NYSE session, these 3 green circles. From here it's about from 7:30, I think from 7:30 till 10, but sometimes I finish much earlier. So you can choose which time you are comfortable with. You should be totally free without any distractions, any noise, and you can even trade the Asian session, which is most volume is from this time till 9. You can choose any 3 green circles and you can trade this session. I'm sure it will help you a lot to be a consistently profitable trader. This is a really major thing that helped me. So whenever you choose a specific time window, you should stick to it. Like when the session time is up, you should just close the chart and get on to the next day. Next, we have entry setups, which is mainly what's this video about. First of all, we have, so after you choose your trading session, now it's time to choose the, so after you have chosen your trading session, now you have to choose which pair or asset you trading. So I personally trade gold. I've been trading gold for the past 4 to 5 years, only gold. You can choose whatever you want, GJ, USD CAD, whichever pair you are comfortable with. And you should have like enough data about this pair and enough experience, because every pair, it has different characteristics, different movement, and different price action. So next we have the entry setups, which is what's this video about. First of all, we have the breakout setup. So I'm gonna dive into this into much more detail. This is the breakout setup, as you can see here. So what's this breakout setup? You can see that when price was trending to the upside, and now it got a little bit consolidating in the range. Look how it's moving, like in a range. It's not moving up or down, it's moving between these yellow lines, as you can see here. So the breakout setup, whenever price break away from the range. And how can we trade that? So very simply, you need to wait for a closure above the range, like this candle right here. As you can see, this candle closed above the range. So whenever a candle closed above the range, you have to wait for this next candle wick to be formed. A lot of times the candle closes and next candle, it just moves up immediately without this wick. But this wick is very important and very crucial in trading and to increase your win probability. So after we waited for this wick to be created, and now we are going to place like a buy stop right here on the break of this candle. Right here, as you can see the entry, you will place a buy stop or limit order, or you can just do market execution, but I prefer personally buy stop orders. You are gonna place a buy stop here, and before placing your buy stop, you have to know where to place your stop loss. Your stop loss is the most important thing in this whole trading, is the stop loss. The stop loss, it should be preset. Actually, every single thing about the trade should be preset before you even enter the trade. So for example, if we have a range to the left hand side like this, for example, we have a candle that looks like this, you should be targeting the high of this candle right here. That's where you can place your take profit or partials. So everything, it should be preset, or any rejection, if there is for example a candle with a wicks here, rejection. This is a very simple way to explain what is a breakout is. Now I'm going to dive a little bit deep more into details. So for breakout, we have a lot of breakout setups, but I'm going to explain it in short. Let's start with the A plus breakout. So actually this PDF was done by Biggie. He is our dear friend in our Telegram group. I will leave the link in the description in case you are interested of downloading this. So as you can see here, price have closed above our line. So as I was saying, as you can see here, that price closed above our line. As I was explaining, we got this nice closure above our support and resistance line. It can be on the 30 or the 1 hour time frame. It could also be on the 15, but the higher the time frame is, the higher the confirmation. It's much better to take to place these lines on the 30 or 1 hour or even 4 hour time frames. So this called breakout A plus setup, which is the most perfect setup you can see. It's actually one of our high win rate setup. So basically, after we got a closure, we got this like rejection candle. So to retest this range one more time, this candle shows that it failed to close back inside the range, which means there is a weak bearish volume. And after this candle is closed like this way, you will place your buy stop or your order right here on the break of the high of this candle right there. Your stop loss will be below the current candle or the previous candle, depends on how many pips this candle is, and you will target the range to the left hand side, and as simple as that. So now I'm going to show you like a real life example about this in my trading journal. So this is my trading journal. Let's go to breakout. So all of this is breakout setups. So I'm going to show you one win and one loss of my breakout setup. Let's go to this one, for example. So look at this trade, how clear it is. It's very simple, no need any explanation. We saw that this candle closed above the range, and I waited for this wick patiently, and after this I entered on the break of the high. As you can see here, boom, and price just went up very high. I made a very nice profit in this trade. So now I'm going to show you another trade. So this was on the 1 hour time frame breakout setup. Here you can see that this is a little bit not clear setup. It looks like a breakout where this red candle closed, then this one closed back in. You see how choppy it is, which is not good to take. So let me also show you the next one. We have many types of breakout. You can see here this is the sell, this is impulse breakout, and this is breakout with like small body. Look how weak this candle closed. So for every breakout setup, it have different criteria, different stop loss, and different win rate. That's why you should have your own journal to study this. This is actually one of my favorite breakout setup, is breakout with a wick fill. So now I'm going to move into the next setup. Enough speaking about the breakout. Then next setup we have the fake out. Fake out, where most traders lose their money in this specific setup. So what is the fake out? It's basically, you can see here how this candle closed below the range. So it looks like a breakout. Then the next candle moved, break the low, and then closed back again into the range. See, so most of traders, they actually take a sell here, take a sell right in this area, and then they got stopped out. There is a lot of ways to detect the fake outs. I'm going to explain it in a different video because it will take a long time. As simple as that. So whenever we see a candle break below the range and then breaks back above inside, you can place your entry on the break of this previous candle. It should be with a strong body. Look how this body is stronger than the previous candle body, and it broke the high already. You should definitely 100% wait for this wick to be formed. The wick is very crucial and very important. You will take your entry on the break of this high, partials to the top of the range, or even TB, and stop loss below the range. I guess it's very simple. So let me show you what types of fake out we have, and then I will go into the examples. Alright, we have here some fake out. Look, this is the simplest one, fake out at support and resistance. You can see that candle closed below, then big body candle. Look how big this body is that closed above. The candle has a big body, and also it break this previous candle high and closed. It's better to take the fake out on the 30-minute or the 1-hour closure, which is much better. 30-minute time frame, you can see this. Whenever you see, you directly execute without hesitation. Yeah, I think this is the only form of a fake out, but as you know, there is much different varieties to it. So I'm going to show you now one win and one loss of the fake out setup. As you can see here, I don't have many fake out setups. For example, let's check this win. This was very recently. Alright, so this is a little bit advanced one, but you can see here that I took this trade on the 30-minute time frame. Look how simple this was. So price closed above this range right here. You can see huge green candle. Price closed above this range, and then this next candle closed back inside into the range. You can see here that I draw these two lines, but don't get confused, it's much simple than that. And I waited patiently for this wick to be formed, and after the wick was formed, I entered on the break of the, let me check, break of the previous low, and boom, to the first rejection area. Grabbed about 1 to 2, I think. So now let me show you a loss that I took. So this was on the 1 hour. Let's check the 1 hour time frame. Alright, so we can see here that this candle on the 1 hour, it closed inside the range and then closed back outside the range. Next we have support and resistance. This is my bread and butter. It's one of the best setups I like to take trades on. You can see here that price was moving to the upside. We are in an uptrend, and then created a resistance here. Price moved down, tapped this support area, closed above the support with a nice rejection wick. Look how nice this rejection wick is. And then you will definitely need to wait for this wick to be formed, and you will place your buy stop or entry on the break of this high of the candle, stop loss below the range or below the current low of this candle, because this wick would be very large. It will be 100 plus pips, so you cannot place your stop loss below there. And this is where you take partial to the top of the range, or even you can leave a runner or just close your full position, right? So now I'm going to show you some real examples from my support and resistance. So let me show you some examples. Look how high. Actually, I forgot to mention this, guys, but this setup, it has the highest win rate. The highest win rate among all these other setups. This is the best setup to take. Its win rate is about 90%. Has about 90% win rate. Can show you here in my journey. Look how many trades I took, just support setup, about 22 setups, and I have 2 losses. So this specific setup has about 90% win rate. So I'm going to show you just 1 win and 1 loss. Let's choose a random one. This one, for example. Wow, look at this amazing trade. You can see here that price created a support candle, and then this is the next candle. I believe this was some kind of impulse entry. So after price closed above our resistance support area right here, price went directly up, entry right there, exactly same as this one. You can see here that is just a copy paste of this one. I think there was just a little wick to the bottom side. Let me show you a loss now. Alright, so this is some nice loss. You can see here that price created a support, but I think this candle was a little bit weak candle, or this could be just a probability loss. So you should not be like mad, or you should not revenge trade or do anything over trade, over leverage or something. You just take your setups, and if it worked, it worked. If it didn't work, then it didn't work. Look how many times here this setup worked than the times it didn't work. Just 2 losses and 22 wins. Man, that's amazing. So this support and resistance, this is the support setup. It's actually, some people call it onion, some people call it also pullback. So it has a lot of name which is common in the community. Look here how beautiful this is. This is some types of support whenever support is formed back inside the range. This is also another type of the pullback or support setup with this rejection candle. So I'm going to leave this link for this PDF in the description, or I mean the Telegram group. You can visit our Telegram group and just have this PDF totally for free. You don't need to pay anything. I also like when we have this pullback with the wick fill. This is where the best trades happen. So now I think we have finished now the entry setups. Now we are talking about stop loss. I think I mentioned where to place your stop loss, take profit. So now the risk per trade. So if you are trading your personal account, your risk shouldn't go above 1 to 2% depending on your win rate. So you have to find your win rate first and then execute based on that. So 1% of the account, I think, is the sweet spot for the beginners. But if you are advanced trader, you can risk however you want. So now I'm going to show you the proof of this trading strategy. This is the real proof from evaluation account. I think Lucid Evaluation. I passed this account. So here it shows you the win rate of these trades. My current win rate is about 73% to 26% losing trade. Look, my highest winning trade. So on this funding account, if you are trading prop firms account, I personally tend to risk from 0.5 to 1% max per trade, which has helped me like enormously. You can see here that my highest winning trade is about $400, and my biggest lose is about $226. This is some details if someone interested in reading it, but yeah, you get the idea. And here it shows me every trade, timing, execution, and the duration. Yeah, so now let me show you some real life examples about this trade I took recently, very recently. So you can see here, this is the fake out setup I talked about, where price, look here how price closed above this area and then closed back inside the range. I entered on the break of the previous high and grabbed about 60 pips. My stop loss was about 40 pips, so this is 1 to 1.5. This is another breakout entry. So actually I got stopped on this trade because I believe it was a pre-NY. So I think I got stopped on this week right there. I kept my stops above the range right here and then got stopped on this week, then re-entered again somewhere right here on my entry and grabbed about, I think, 60 pips. My stop loss was a little bit less than 60. Alright, so here this is what we call a support or a pullback setup. It's actually combined. If you look at the 30-minute time frame, I think it will be much clearer than that. Yep, right here you can see price moved up, creates support right there. This is the support, and we entered on the break of the current high. Price went for about 82 pips. Stop loss was below this candle right here for 50 pips. Look how perfectly amazing this work. And to be honest, this support setup, you can see it or pullback or onion or whatever you prefer to call it. I just call it a support. You can see here that it appears many times. So for example, right here you can see this candle closed above the support and price just went up. Also right here closed, created a support, and boom, price just went up. Another time here. So it shows very frequently. This also, it's called an impulse. This one right here, it's an impulse pullback. I can show you right here. Yep, something like this. So here, as you can see, impulse pullback or onion or whatever you like to call it. I entered right here on the break of this high after this candle. This was the second break of the high actually. Yep, so back to our PPT. So now we talked about the risk per trade. Now the most important of this all is journaling, guys. So journaling is what changed my trading journey, and it's very crucial and important for you to journal your trades. As you can see here, this is my trading journal. I've been journaling for quite a long time actually, and I have files with all my trading setup. It's saved in file since 2 years, I guess. From 2 years, I wish I could have started earlier. This have helped me a lot. I'm going to leave the link for this free journal in the description below. It's a very simple journal, date and time, bias and trend, session, setups, and time frame. Later on in the next videos, I'm going to show how can you improve your journaling and how does this help you with trading. So please focus on journaling, guys. I know it's boring. I know no one's like to do journaling, and you should also have a physical one. So you should have a physical journal like I have one. It's next to me right here. It's always here, and I journal everything that I took in a trade. Look at that. It's like about closure. And so here I wrote no trades before NY open, 30-minute, wait for 30-minute candle closure, close full at 1-to-1, wait for the best setups, you know, just simple stuff that will help you massively to increase your win rate. So finally, I wanted to speak about this a little bit because a lot of traders, they asked me to explain these words. What does it mean, these little concepts? For example, overextended price. Overextended price is simply when price have moved in the direction for quite a time. For example, you can see here, for example, how price moved bullish for about, look how many green candles was there. Like there are many, I think around, this is about seven green candles. So do you think it's a good idea to take buy here or here? Actually, it's not a good idea at all to take buys after three green candle. Maybe not on the 15 minutes, but on the higher time frames. You can see here 1, 2, 3 green candle, and then we got a red candle, and then price kept moving in the direction, So what we mean by overextended, that means price have moved in this direction for about 3 or more candle, like 3 and above, it's called overextended. So whenever you see 3 green candles in a row, it's not a good idea to take buys, but to wait for a support to take buy from the pullback, and the sells is the same. So now, impulse entry. A lot of people have seen recent, for example, Raja Banks takes a lot of impulse entry, which is amazing and nice. I think everyone likes impulse entry, but unfortunately impulse entry does not work all the time, and it needs a lot of experience. For example, you can see here how this price after it closed, we got a really nice closure, and this candle, this was actually an impulse entry right here on the break of this low. This is an impulse entry. So but this is like a nice one, it's a good one. We had a confirmation, a lot of confirmation, but most of the traders, they enter without confirmation. For example, look at here, look at this one right here on the break of this candle high. It also might be considered an impulse entry, but look, price went for about 9 pips and then boom, it went down for about like, wow, like 100 pips. So to be honest, this is my personal opinion, this is what helped me personally. If you want a high win rate, you want to be consistently profitable, you just stay away from impulse entry if you are a beginner. So when you see Raja taking these trades and he's getting into a massive profits, man, this guy has been trading for more than 8 years now. But you're just starting. If you are second year, third year, or even fourth year, man, this is not enough experience to take impulse entry. So it needs a lot of experience to execute on. And also the counter trend trade as well. Counter trend trade. So if you are a beginner trader, just stay away of the impulse entries and counter trend. Counter trend in simple is, for example, when you are taking a trade against the trend. For example, you can see here that this trend was moving down right here, bearish, created support, and then, for example, if you take a buy right here on this break of the candle, see how this candle closed bullish, created a nice support. If you took a buy here, you would have been, it's like a fake out, or it would hit your stop loss right there. Why? Because this was a counter trend trade. But you will tell me, oh, price created the support, this is a nice candle and it's breaking above, I was anticipating it to go fill the range. No, man, this is a counter trend trade. You can see here very clearly that the trend is moving to the downside. Look how this is, we have a bearish trend and it's moving to the downside. So this is basically just in a simple explanation what a counter trend is. And then we get into the wick fill, which is my favorite concept is the wick fills. When price creates a wicks and the wicks tend to get filled. So the probability on the wick fill is about 80% probability, which is a very high probability. So it's much better if you can use it in your advantage. Personally, I like wick fills on the 4-hour time frame, but it's the same for the 1 hour and 30 minute and every other time frame. So simply, what is the wick fill? So you can see here that this is our support and resistance line, and this 4-hour candle created a wick. Look at this beautiful wick to the left hand side. This wick was about 700 pips, 750 pips. This is a wick right here. You can see this is a wick. So what basically the wick fill concept is that price will mostly tend to fill this wick, like what happened here in this candle. As you can see, this candle just went and filled the wick right there. It's just as simple as that. This is the wick fill of that candle. Let me draw this ugly drawing. Yup, So this is what we mean by a wick fill, is that price tend to fill wicks. Right here also, look how huge this wick was. It was about like 2000 pips, and price just went down and filled this week. Also right here it filled this week, but sometimes it doesn't fill the weeks like you can see here. So it's better to keep it in your advantage, the wick fills. I think that was all for now. It was like a simple explanation. I didn't went into many details, but I promise in the next videos I'm going to dive deeper into details about the trading strategy and how to increase your win rate, and talking about confirmation. So make sure you leave a like and subscribe to the channel, and if you have any question, just leave a comment below and I will do my best to create a video and make it easier for you guys and explain everything in details.